Today we are talking about hitting your first million in revenue and how smart market research make it happen. If you're already making six figures, we'll show you how this same process can help you achieve 7 and 8 figures online. This process works. Our UK property investment firm doubled ROI in just 6 months. Even during COVID, when other businesses were shutting down, one of our artificial grass clients grew by 20 times from £6,600 to £136,000 monthly revenue. That's £1.5 million in a year. And we are sharing it here completely for free. So far in this series, we have covered discovery. In this, we talked about 3 golden W's: what, who, and why, and how this can help you sell the same product and service at 10x the price. Find right people, build trust, and create message that drives action. Make sure your audience can find you, craft layout that converts, and plan a site that's ready for the next level. So if you missed any of those, go back and watch them first. And grab the free discovery guide in the description to turn everything we discussed into an actionable plan and start moving towards multi-million revenue goal online. Every business hits a ceiling. For some, it's before the first million, and for others, just after. The difference between companies that stall and those who scale to multi-million isn't the product, it's how well they understand their market. And that's why the next stage in the DRS process is research. And under this research, what we are going to talk about is the market research. So look, market research shows you what buyers really want and what competitors miss and how to position yourself as the obvious choice. So if you are new, I am Rahul Parashar, founder of Credofy Solutions. In 2012, I left Accenture, one of the world's leading consulting firm, to build my own business, Credofy. Made plenty of mistakes, lost thousands, and finally crossed my first million mark. And from that journey, created this 3-step process to help other businesses skip those mistakes and scale to their first million and multi-million revenue in online. Think of discovery as the map, and research is where you step into real landscape, market, competitors, and buyers to find the true path and opportunities. You'll also find a free research handbook with checklist, template, and examples to execute the exact steps that we are going to talk now. The link is in the description. Make sure you download it and follow along. In the DRS framework, the research has 3 key areas. One is market research, and the other 2 we are going to reveal later in the video. So make sure you watch it till the end. So let's start with the first step, which is market research. So let me walk you through the 4 points here, and the first point starts with the clarity. So here you need to answer why exactly you are doing this market research, and then comes your signals. So here you need to find where is the demand, and then comes your landscape. So here you need to answer who else is competing in this space and where is the space to win. Then comes number 4 is your pathways. Here we will be answering how will your offer reach the market. So let's start with the first, clarity. And here you need to define your objectives before you do market research. So before you pull any numbers or you pull any report, get crystal clear on why you are doing this market research. So look, every page you design or the feature you build or ad you buy depends on this very first step. And most business skip this, ending up with data that doesn't answer the real question. And decide which big moves you're planning. So if you are launching a new product or service, you need to know the size of your market first. And check the potential growth and the competition. Spot entry barriers. And then you need to check the growth potential and who is there as your competitors. And also you must spot the all entry barrier. And if you are expanding to new region or vertical, you need to map your competitor landscape. What are the pricing norms? What are the cultural differences? And what are the regulations? Look here, your existing persona may not be directly transferable. You need to understand specific needs, behavior, and preferences of the customers in the new environment. And if you are scaling your existing offer, you need to find the emerging trends, find all category gaps, and the macro forces for the next growth phase. You need to qualify the current versus potential market share and identify who are the high value customer segment and benchmark against key competitors. You have got to test the new pricing and channel strategy to drive the sustainable growth of product and service across current market. And here is a quick example of a UK property investment client has an outdated website. The leads were expensive and converted poorly at 2.2%. Also, they had local concerns of increasing mortgage rate, inflation, and drop in property prices in 2023. The goal was clear: how to turn this fear, hesitation into opportunity and revamp the outdated design and find this high intent, low cost segments abroad. Key questions include: which overseas market are actively investing in UK property? And what are the trust barriers to stop them from acting? Ask yourself similar starter question. What is the single decision this research must guide? Which product and service or the market are non-negotiable to ignore? What time frame matters? Is it monthly, quarterly, yearly, or 3-year? We have made this even easier in the free research handbook. Link is in the description. Inside you will find the exact questions to ask, ready to use templates and checklists to keep your research focused. And once you know what you're trying to uncover, the next step is to look outward. What's changing in your industry and what signals is the market actually giving you? And this comes to the market data and demand. So look, once your objective is sharp, the next step is to back it up with data and read the signals the market is already sending. Strong market understanding rests on two parts of data. One is your primary data, the other is your secondary data. So primary data is the one that you have collected yourself, and this is your internal data. Whereas the secondary data is the trusted information and existing data collected earlier by others for different purpose which you can rely on. And this is the external data. So we'll go deeper into the primary data, insights of 100 plus investors that we interviewed and surveys that we did, and more in the next video when we talked about user research. Right now, let's focus on online secondary data because that's what gives you the broad map of where the market is headed. Key secondary sources tap industry reports and white paper, trends, forecasts, and big picture shifts. So here, the first thing that you need to look at is the Google Trends, and the other thing that you can look at is the Statista. So we are considering this example and trying to explain the research from this particular case study that we did for a UK property investment firm. And there are many external sources that you can refer, but these two is what we are going to cover now. And for that, I need to take you to my laptop and I'll explain you how you can do this and collect this data and check the demand by looking at the Google Trends and some of the Statista reports that we downloaded for this specific property investment client. Just go to google.com or co.uk and just search Google Trends and click on this first link, which is trends.google.com. And here what we did is, like, we found when we applied it to this UK property investment client who mainly deals in buy to let and off-plan properties. So let me search quickly buy to let here. You just click on enter, you can just click on explore, change this region to your region. So for example, here we are going to change it to United Kingdom and change the date range to 5 years. So here what we saw, like compared to 2022, so for buy to let, for example, we noticed that the demand was already dipping before 2023, right? So compared to 2022, it fell further in 2023 and 2024, driven by the high mortgage rates and inflation, which you are going to see in the Statista report. So people simply weren't investing or buying properties. We also noticed a seasonal pattern. You can see here in the month of October, demand is pretty high, and the month of January again, the demand is pretty high. And we could able to deliver maximum ROI for this particular client in those months. Every year, demand tends to peak in January month, as you can see here, and it dips in the December month. So by spotting this pattern early, we help the client redirect their ad spend in messaging towards the high intent month and position their offer right at the start of next upswing. And now let's see some of the Statista report. So here we downloaded a couple of reports of residential housing market and the overall real estate market in the UK. So I cannot show you the entire report because I don't have authority to show you the one which we have downloaded for $500, and each report is $500 in Statista, right? So I can give you some of the snippets. I can attach some of the screenshots. So you can see the property price here dropped in 2023, right? And the house prices dropped the same year too. And then we showcased the brighter side the next 4 years forecast. And we also confirmed that the inflation was at peak in 2022 and the mortgage rates were also rising. So what we did, we merged the entire data together in this one particular chart. So let me show you that exact chart. So here you can see what we analyzed, which this happened during the Lehman Brothers crisis in 2008 when the mortgage and the inflation was at peak and the properties prices dropped. So here you can see after that time the property prices immediately starting rising, and this happened in 2023 as well when the mortgage and the inflation was at peak and property prices falling down. And this was the couple of buying zone for all those investors who buy in property. As you know, in stock market as well, these buying zone keep on appearing when the stock price falls. If it's a good stock, that is the time to buy. And here is how it works: when the inflation goes up, mortgage rates also rise and property price drop. That's what we saw. And just like the stock market, that is the time to buy, as I already told you. As Warren Buffett puts it, be fearful when others are greedy and greedy when others are fearful. This simple shift turned the hesitation into opportunity. Investors quickly realized they had missed the last cycle, and another one is going to emerge right now as mortgage rates start to ease. This means it's the perfect moment to secure an off-plan property. Put down 20% today and your mortgage won't kick in for another 2 years. By then, the rates will be lower and the prices will have gone up and you will be earning higher rental yield on your capital. And then what we did is we went to competitor website and see what they were winning and where they were weak. So for that, you can use tools like SEMrush. So let me just go to the SEMrush and quickly show you how you can do some sort of a quick competitor analysis. Using SEMrush, you can dig into any competitor online and pay traffic to see what's really driving real growth. And here you can see this client, his organic traffic is already rising as we created 300 plus high intent pages for this particular keyword. As we discussed in our SEO discovery, when we talked about we have to work towards the intent and not the exact keywords, and that is because of that reason this client traffic is rising month by month. For this UK property investment, we analyzed their top competitor to see how many total keywords that they rank. So to get the top competitor, let me quickly go to Google again and search property investment UK, and let's see which competitor is ranking on page 1, position 1. So let me copy this competitor and simply go back to my SEMrush and go to SEO, and let's go to organic research and let me paste this URL. So here you can see exactly for how many keywords are they ranking, what is their traffic, and what is the traffic cost, right? And which pages are getting them most of the traffic. So you can get all this data from here. And what share of those keywords are informational, navigation, and transaction. So all that we discussed during when we were talking about SEO discovery, and how much is the estimated traffic cost that you can see, and what is the traffic value, and how their backlink profile is built. So for getting the backlinks, you can go to this backlink gap and you can get all the backlinks of these competitors, and you can get their link velocity and their authority as well. So we have also used SEMrush to uncover the keyword and the backlink gaps, the phrases and the links they were missing. So a client could target untapped opportunities and move ahead faster. And then you can use some of the government or trade database. These are the hard stats on demographics, spending, and growth. And for this, you can use World Bank data, US census, or your country's equivalent. Right. For this property investment client, we used Office for National Statistics to get the details chart on housing supply, property transaction, affordability, rental trends in across UK. So let me take you to that particular ons.gov.uk site that I'm going to show you here. Right, so you can see all the average rent, how much is the house price, what is the monthly rent, how much the first time buyers are paying, how much the mortgage buyers are paying to buy a house, right? So all this data you can get it, and you can see different type of properties are priced at what particular price point. And you can even see what is the rent change by bedroom size, right? So once you scroll down, you can see how much people are paying rent for 1 bedroom, 2 bedroom, and 3 bedroom, right? So you can get all this data from this government site. So it's like one-stop source to track property values and rental yield trend across UK with reliable government verified data. And then comes the third point, what we have discussed so far here, the external sources. You can use tools, or you can refer the government sites, and then you can even do social listening. And for social listening, there are a couple of tools that you can use. One is BuzzSumo, and other is BrandWatch. And you can even use some of the community sites like Reddit and Quora to see exactly what is the sentiment of people and what they are exactly saying. But those data alone isn't insight. You need to connect the data, and this is where your TAM, which is your total addressable market, and then you have your SAM, which is your serviceable available market. So the slice that you can realistically reach. So TAM is everyone who could ever buy. And then third we have is your SOM. So this is serviceable obtainable market, the share you can win in next 12 to 24 months. So here is how we apply it for a UK property client. The TAM, we started with the full residential market and all those reports that I've shown, from domestic to international investors combined. So the key facts set the scale. UK property market here was at 360 billion pounds, and this is expected in 2024, which is expected to go to 476 billion pounds by 2029. So this is 5.75% CAGR. And in SAM, we focused on the segment this client can readily serve. So these are high growth regeneration cities like Manchester, Liverpool, and Birmingham, and all those areas which are in Northeast and Midlands. Because after seeing the report in Statista, we saw like Liverpool is where the demand is pretty much high, and this is where the property prices are going to rise at a pretty steep rate. And then we also saw the strong off-plan demand. Around 41% of the purchases are happening in off-plan properties. And talking about SOM, so finally we isolated the share that they can win in 12 to 24 months by blending market stats with live performance stats. So here what we saw is their existing client database is 50% of their client were from outside UK. So covering most of those Nigeria, UAE, South Africa, and beyond. This became the SOM because of the current UK factors. UK residents were hesitant to purchase properties, but immigrants or outside UK investors were readily investing. By connecting this market intelligence with the real buyer behavior, we pinpointed the most reachable high intent segment, those with strong currencies, active interest in UK property, and minimal regulatory friction. This laser focused TAM, SAM, and SOM gave the client confidence to launch targeted global campaigns and double ROI in just 6 months. Remember, collecting numbers isn't the goal. The goal is to see the pattern, spot recurring themes across the multiple sources, and you have to find the demand hotspots where the supply is thin, right? And segment these insights by region, category, or growth stage. Turn each finding into the next move, which could be your pricing, positioning, or your entry strategy. With those fundamentals in place, you can track how the market is shifting and see the signals that point to tomorrow's opening. In the upcoming user research video, we are going to go deeper into buyer motivation, decision triggers, and exact language your audience uses. But first, lock in the market level proof and signal map. It shows where the real opportunities are and how fast they are moving. So every step is built on the evidence and not the guesswork. And this takes us to the next step, which is landscape, where we are going to talk about the market entry, the saturation, the gaps, and the entry play. So once you have mapped the market proof and signals, the next question is simple. How crowded is your marketplace? So imagine this is your marketplace and these are all your competitors who are offering the same services or selling the same product. So understand, you might have heard this as a term called red ocean, and how you will break into a blue ocean where there are lesser competitors and you find your own white space. So your job here is to cover this white space, the real need that no one is serving well. Our UK property investment client did exactly that. Instead of fighting every local investment agencies, they spotted an overlooked gap: overseas investors who wanted secure, full managed UK property but faced trust, legal, and on the ground support hurdles. By shifting from broad UK property for sale and pitch to secure handoff UK property investment for overseas buyers, by then we asked what could truly set it apart, since others could be selling the same. But we also added the money back guarantee. And to protect the business, if every investor demanded a refund, we built in a 3-year lock-in period. About 2 years for the development and up to 1 year to get the property rented. And by the time lock-in ends, most investors are already earning rental income. And only few ever think of asking of their money back. So this is how a single positioning shift backed by safeguards like money back guarantee and a smart lock-in period turn a crowded market into a clear defensible entry lane. And once you see the gap, choose your entry play. And these are the niche strategy. So here you start small, dominate one segment and expand. Then you have your partnerships and your franchisees. So borrow trust share and ready-made distribution. Then you have your wide scale launch. So if you're just starting, we won't recommend this because here you have to put in a lot of money and you have to be backed by investors. So this creates instant buzz and grab share fast. So only big fish can do that, or unless you have a lot of funding, right? And then comes your smart copycat. So find what businesses are doing well in other regions, let's say US, and copy that into your local culture and see what are the rules and sizes that you can probably copy that particular existing proven model from other region to your region. But getting in is the only half battle won. Positioning is what makes you memorable. So ask yourself, how do you want to live in your buyer's mind? Is it with cost leadership? So here you be the affordable choice without compromise, like Walmart do. Then you have your premium exclusivity. So here you charge more for status and aspiration, just like Rolex and Tesla do. Then you have your innovation leadership. Do something which no one else is doing, just like Apple did with iPhone. Then you have value and culture. So here you need to win loyalty through shared beliefs, just like Patagonia do. And then comes your experience differentiators. So here you make the purchase unforgettable, just like Apple do in their stores. And if you are being following along, you will remember we first talked about positioning back in part 1 of Discovery, how vision, value, and culture can set you apart. So if you missed that episode, watch that first, because what we are covering here builds directly on that foundation. And be sure to download the free research workbook from the video description. It's packed with checklist, key questions to help you spot market gaps and plan your market entry step by step while you follow along. And remember, entry and positioning work together. So entry gets you into the market and positions keeps you there. So if entry is aggressive but positioning is weak, you burn cash and fade. But if your positioning is strong and entry is weak, no one is going to notice you. So with entry and positioning set, the next step is building your go-to market pathways, and here we come on to our fourth step, which is pathways, and here we are going to talk about go-to market factor. So look, planning the channel and distribution moves and legal checks that can let customers find trust and buy at scale. So with your entry strategy and positioning clear, the next challenge is access. So can people actually get what you offer? So imagine this is you and this is your target audience. So think like target audience can get exactly what you offer, and that too easily and legally, and that too at scale. So this is where your go-to market factors comes in, and they blend your distribution, how your product reaches your buyers, and the regulations, the rules that shape that particular journey. So ignore either, even the most trusted high value offer that you have, it can stall. So your distribution plan must answer 3 specific questions. So what do your buyers actually buy? Are they on established marketplace in retail stores and relying on direct sales or partners networks? Here you need to see which new channels are surging. Is it social commerce? Or is this AI recommendation? Is it live shopping? Or is it direct to customer, which we call D2C channels, right? So this opens the door to your unexpected growth. So what are the hidden costs and limits? Entry fees, ad cost, partner margin, or logistic hurdles can quietly drain profit. Being early to the right emerging channel can create step-changing growth, much like brand that seized TikTok in 2020. But fit matters. A B2B SaaS product scales better on LinkedIn than Instagram. Regulatory readiness is equally critical. You need to map industry-specific compliance, finance, healthcare, food, education, all carry strict licensing and safety standards. Then comes your data privacy. Here, your GDPR, CCPA, or equivalent govern how you collect and store data. Then comes your international trade and tax rules. Cross-border sales mean custom duties, import restrictions, and double taxation concerns. Our UK property investment client treated these as a part of research and not an afterthought. They secured trusted international payment partners aligned with tax advisors across region and built a GDPR compliant data flows before launching. That preparation let them run targeted global campaigns confidently and even click and contract on solid legal ground. So the key takeaway, make sure you have chosen the channel and the compliance plan allow customers to find you easily. Trust the process and complete purchase without friction. Strong market entry is the only beginning. Scalable, compliant pathways turn opportunities into lasting growth. That wraps up the 4 core moves of the market research. After working through these 4 points, you now hold the answers to the key market questions. Clarity is where you know why you are doing this online market research and the decision it will guide. Then comes your signals. You see where the real demand is and which trends prove it. Then comes your landscape and the market entry. You know who is competing and where the open space is to win. And finally comes your pathway. You know how your offer will reach the market through the right channels and the compliance path. To help you put into action, download the free research handbook. Link is in the description. It includes a dedicated tool checklist with all decision-ready deliverables we use with clients ready to use as you plan your next move. And we are not done yet. In the next part of the market research series, we'll dig deeper into full 360-degree market view and break down the classic framework like 5 C's and Pestle to help you spot the hidden risk and the next growth opportunities with confidence. Thanks for watching till the end, and if this helped, give it a like, drop your thoughts in the comments, and don't forget to subscribe so you don't miss the part 2 of the market research. I'll see you there.